If you're a small business owner, contractor or freelancer operating through a limited company and want to clearly understand how to make tax-efficient pension contributions for yourself or your employees, then this video is for you. I'm Tony D'Angelo of the Accounting and Tax Academy, and today we're talking tax-efficient pension contributions. I'll explain how pension contributions work, the thresholds, basic mechanics, and whether you should contribute through your limited company or personally. So by definition, a pension is simply a savings plan to help you for later life. In the UK, as of the date of this video, the official state pensionable age is 67, although this will increase in the future for sure. You can usually withdraw money from a private pension plan from the age of 55 onwards, and you can take 25% of this tax-free. So let's say your pension pot is £250,000. You can take £62,500 as a lump sum tax-free. Pension contributions are often made by your employer, who will contribute directly into either an occupational scheme, a private pension, or something like a self-invested personal pension, also known as a SIPP. But what if you are a contractor, freelancer, or small business owner? In this case, your limited company can make gross pre-corporation tax contributions directly into a pension scheme, such as a SIPP. Unlike a personal pension contribution, there are no restrictions as to how much you contribute, as long as the annual allowance is not exceeded. This is the amount you can contribute to your pension scheme tax-free in any given tax year. Now, the annual allowance is currently at £40,000 per tax year per individual. If you exceed this amount, you could end up losing tax relief on your pension contribution, although you are allowed to carry forward unused allowances from the previous 3 years. As an example, if your limited company makes a gross contribution of £10,000 into your pension fund in a tax year, effectively you will have received corporation tax relief at 19%, and any dividend tax relief quite often at 32.5%. This could equate to £4,533 in tax relief. Gosh, that's nearly 50%. You can click on the icon above to get a download of how exactly I work this figure out. But be careful with limited company contributions, as HMRC could potentially disallow them if they deem them as being excessive. Extra care should be taken for large one-off contributions too. Now, my advice is to talk to a professional before doing any of this. And if you're not sure where to start, click on the link below to head to our website and book a no obligation advisory call with either myself personally or a qualified accountant on my team. So how do you actually make a contribution to your pension scheme? Well, the process is quite simple. All you need to do is make sure you have a pension scheme set up, like a SIPP, and make the transaction from your business bank account directly to your pension scheme. Label the transaction clearly, such as pension contribution to your name. If you don't know where and how to set up a pension scheme, a good place to start is Hargreaves Lansdown. Follow the link below in the description box to their pension site. And just for the record, we receive no commission or incentives from Hargreaves Lansdown. In fact, they probably don't even know we are suggesting them. I do so from my own personal experience and those of many happy clients of ours who have actually used them. After you have been paid through your limited company and have paid any necessary taxes, you can make pension contributions personally from your disposable income, and the taxman will top up your contribution. So here's how. Let's say you make a £800 personal pension contribution into your pension scheme. The taxman will then top this up with the equivalent of a basic rate of tax, which is 20%. So that's £200 to give a total contribution of £1,000. Your pension provider will automatically claim this top up, so you don't have to do anything. And if you're a higher rate taxpayer at 40% or above, you will also receive further top ups. However, this is not done automatically and has to be done through your self-assessment tax return. Now, you have to be careful here. Although the annual allowance is currently £40,000 per annum, you can only contribute up to 100% of net relevant earnings. To put this simply, if you are taking a director's salary of £9,500 per annum, for example, then this becomes your net relevant earnings. So personally, you can only make a tax-efficient pension contribution of £7,600, and the taxman will top this up by 20% to make it a total of £9,500. That is 100% of your net relevant earnings. Yes, you actually can, but only commercial and not residential property. Some benefits of putting your commercial and buy-to-let properties into a pension include: you get corporation tax relief on the net rental income. Property held inside a pension is not subject to capital gains tax. And property held inside a pension falls outside of your estate for inheritance tax. Finally, the rent your company pays into your pension plan is tax-free. So there is plenty of tax relief in placing commercial property into a pension, but don't forget it could be locked into your pension scheme until retirement age. Only recently, the UK government has launched the compulsory auto-enrolment pension system, mainly aimed at small business owners, freelancers and contractors alike. Now, for more information on this, follow the link below in the description box. If you want us to do a more comprehensive video on auto-enrolment, then drop us a comment below. We'd be glad to hear from you. So let's recap. Making cash-based pension contributions, whether through your limited company or personally, or placing commercial property into a pension plan, attracts generous tax relief. Pension contributions are a great alternative to taking dividends for limited company owners, and especially if you are tax conscious. But the downside of pensions is that your funds will be locked away until retirement age, so you need to consider this. So I hope this video has helped you understand some of the basics of pension contributions and has taken you one step closer to knowing your numbers. As always, let me know in the comments below your thoughts on today's video, or if there are any other topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us get the content out there. This is Tony D'Angelo for the Accounting and Tax Academy, and once again, thanks for tuning in.